In the intricate tapestry of global economies, Japan stands as a paradox that has confounded economists and policymakers for decades. With a public debt soaring beyond 250% of its GDP, stagnant economic growth persisting for over 30 years, and a rapidly aging population, Japan seems like a nation on the brink of financial disaster. Yet, contrary to traditional economic expectations, Japan has neither collapsed nor descended into chaos. It remains the world's third-largest economy, a global leader in technology and innovation, and a society marked by remarkable social stability. This resilience defies the conventional rules of economics, prompting a deeper exploration into how Japan has managed to navigate such treacherous economic waters. To understand Japan's current economic landscape, one must first journey back to the nation's period of extraordinary growth during the 1980s. Emerging from the devastation of World War II, Japan transformed itself into an industrial powerhouse. Its rapid economic expansion was driven by innovation, an export-led growth model, and strategic government-industrial collaboration. Japanese corporations such as Toyota, Sony, and Panasonic became global icons, and the country's manufacturing prowess in automobiles and electronics solidified its place on the world stage. By the mid-1980s, Japan was not only economically powerful, but culturally influential, with its management philosophies being emulated worldwide. The Japanese corporate structure, characterized by the keiretsu system, a network of interlinked corporations spanning banks, manufacturers, and suppliers, fueled this meteoric rise. This system promoted close collaboration and stability, allowing companies to access vast pools of credit and invest in long-term growth. However, this environment also fostered overconfidence and speculative excess. The Bank of Japan, seeking to curb the yen's rapid appreciation following the 1985 Plaza Accord, slashed interest rates, inadvertently fueling speculative investments in real estate and stocks. By the late 1980s, Tokyo's property market had become so inflated that the land beneath the Imperial Palace was valued more than all of California's real estate combined. Yet, this prosperity was built on a fragile foundation. Banks extended credit indiscriminately, pouring money into speculative ventures with little regard for underlying asset values. Real estate and stock prices spiraled upward in a self-reinforcing cycle, detached from economic fundamentals. The speculative bubble, while creating immense wealth on paper, concealed growing vulnerabilities within the financial system. This unchecked exuberance inevitably led to disaster. In the early 1990s, the bubble burst. The Bank of Japan, alarmed by the scale of asset price inflation, tightened monetary policy, raising interest rates and abruptly cutting off the flow of easy credit. The consequences were catastrophic. Stock prices collapsed, with the Nikkei 225 plummeting from its peak of nearly 39,000 in December 1989 to just over 15,000 within a few years. Real estate values followed, erasing trillions in market capitalization. What followed was a prolonged economic slump known as the lost decade, although its effects would extend well into the 2000s. Unlike many economies that rebound after recessions, Japan became mired in stagnation. Economic growth slowed to a crawl, businesses became risk-averse, and consumers shifted from spending to saving. Deflation took hold, dragging down prices and wages in a vicious cycle that further dampened economic activity. Banks, saddled with mountains of bad loans, teetered on the edge of collapse but were kept afloat by government support. Corporate Japan entered a period of retrenchment, cutting investments and hoarding cash. Yet despite this prolonged malaise, Japan did not suffer the kind of systemic collapse that might be expected under such conditions. Unemployment remained relatively low. The banking system, though weakened, did not implode, and the social fabric of the country remained intact. This resilience can be attributed to several interwoven factors, the foremost being the nature of Japan's public debt. Japan's colossal debt, while alarming in scale, is predominantly held domestically. Japanese banks, pension funds, insurance companies, and households are the primary holders of government bonds. This internal financing insulates Japan from the volatility of global financial markets and shields it from the pressures of foreign creditors. Unlike countries such as Greece, which were subjected to harsh austerity measures due to reliance on international borrowing, Japan's debt structure allows it to manage its obligations without external interference. This domestic ownership of debt creates a self-sustaining financial ecosystem where government borrowing is effectively recycled within the national economy. Central to Japan's economic strategy has been the role of the Bank of Japan. In response to persistent stagnation and deflation, the BOJ embarked on a series of unconventional monetary policies that broke with traditional economic orthodoxy. Interest rates were slashed to near zero and eventually into negative territory, a radical move intended to spur borrowing and spending. More significantly, the BOJ pioneered the use of quantitative easing, QE, on a massive scale, purchasing vast quantities of government bonds and financial assets to flood the economy with liquidity. This policy, designed to combat deflation and stimulate economic activity, was later adopted by other major central banks during the global financial crisis. Critics argue that these policies merely paper over deeper structural issues, fostering dependency on cheap money and inflating asset prices without addressing fundamental economic weaknesses. Yet these measures have prevented the kind of catastrophic outcomes seen elsewhere. Japan has avoided mass unemployment, banking collapses, and hyperinflation, outcomes that have plagued other nations facing economic crises. The Bank of Japan's proactive interventions, while controversial, have been instrumental in stabilizing the economy and maintaining financial order. Japan's social cohesion and cultural values have also played a critical role in its economic resilience. The Japanese ethos of perseverance and collective responsibility discouraged panic and social unrest. Companies, adhering to implicit social contracts, prioritized employment stability over short-term profitability. Mass layoffs were rare, and even struggling firms endeavored to retain their workforce, often absorbing financial losses to avoid disrupting societal harmony. This corporate behavior mitigated the social fallout of economic stagnation and maintained a rare social stability in comparable economic situations. However, Japan's challenges extend beyond its financial system. The nation faces a profound demographic crisis that threatens its long-term economic vitality. Japan has one of the world's most rapidly aging populations, with nearly 30% of its citizens over the age of 65. Simultaneously, the birth rate has plummeted, and the population is shrinking. This demographic shift presents severe challenges. A declining workforce reduces economic output, strains social welfare systems, and diminishes the consumer base that drives economic growth. The burden of supporting a growing elderly population falls on a shrinking pool of working-age individuals, intensifying fiscal pressures on the government. To confront these demographic headwinds, Japan has adopted a multifaceted strategy. Recognizing the need for labor, the government has cautiously opened the door to immigration, a historically sensitive issue. New visa programs have been introduced to attract skilled workers in critical sectors such as healthcare and construction. Yet immigration remains modest by global standards due to cultural and political resistance. As a more robust solution, Japan has turned to automation and robotics. The nation is at the forefront of robotics innovation, integrating advanced automation across industries to offset labor shortages. In manufacturing, elder care, and even retail, robots are increasingly supplementing human labor, enhancing productivity in the face of demographic decline. Japan's government has also pursued gradual fiscal consolidation to stabilize debt growth. Efforts to broaden the tax base, including raising the consumption tax, aim to balance public finances without derailing economic activity. Technology, infrastructure, and research investments continue, reflecting a long-term strategy to sustain economic competitiveness. Japan's economic journey offers profound lessons for the world. It challenges the notion that high public debt is inherently catastrophic, demonstrating that debt sustainability depends on factors like creditor composition and monetary policy. It illustrates how unconventional policies can prevent economic freefall, even if they do not guarantee robust growth. Most importantly, it underscores the value of social cohesion and resilience in weathering prolonged economic adversity. Despite its formidable challenges, Japan remains a nation of remarkable endurance and adaptability. Its economy may not roar as it once did, but it continues to evolve, leveraging its strengths in technology, innovation, and social stability. The Japanese experience stands as a testament to the complexity of economic systems, where success and survival often depend not on rigid adherence to rules, but on the ability to adapt, innovate, and endure. If you found this deep dive into Japan's unique economic resilience insightful, don't forget to like this video. Your support helps us bring more quality content like this to you. Subscribe to our channel and hit the notification bell so you never miss out on our latest videos exploring global economics, finance, and world affairs. We'd love to hear your thoughts. Comment below and let us know what you think about Japan's economic journey. Do you believe other countries could adopt similar strategies, or is Japan's case truly one of a kind? And finally, don't forget to share this video with your friends and colleagues who might be interested in understanding how Japan defied economic expectations. Thank you for watching, and stay tuned for more insightful content.